I'm John Hanna for CDTV.net in New York, and we have Greg Womack, President of Womack Investment Advisors, joining us at Edmond, Oklahoma. Good afternoon, Greg, or good morning.
Good afternoon, or yes, good day, John. How are you?
Great. So how are you dealing with this heat wave that you guys have out there?
We're still dealing with it. Over 100 degrees for several weeks now. I think it's 21 days, and you just stay inside. You try to stay cool. If you go outside, stay in the shade or get in the water.
Yeah, bring in bottled water with you or something like that, right, to keep you hydrated.
That's right.
Yeah, we're getting our 90 degrees here in New York City for this week, except for Wednesday. They said that's gonna be only 86, but everything else today, tomorrow, Thursday, and Friday will be in the 90s. So we might be joining you soon.
Well, I hope not. It's just lots of hot weather. It's kind of like what's coming out of Washington. A lot of hot air.
Okay.
These days. And which brings us to our summary for last week.
Yeah.
I mean, goodness, you got the wrangling over the deficit in connection to the debt ceiling. A lot of hot air on both sides, trying to figure out what they're going to do. That's caused treasuries to go up, and prices continue to rise on treasuries, and investors try to get some kind of refuge from anxieties over the European financing problems. And particularly Italy was an issue last week. So domestic equities gave up some of the previous 2 weeks' gains as uncertainty led investors to take some profits. If we look at last week, the Dow Jones is still up about 7.8%, S&P up about 4.7%. But today, noon, July 18th, the Eastern Time noon, is the Dow's taking a pretty good looking today, down 173 points, and the S&P down about 19 points. And if we take a look at support levels, we're getting close to the 200-day average again on the S&P, but it's the previous lows set back in in June that we around 1,258 on the S&P is where I see the previous low as support. I think one thing that would get the markets to have a little brief rally or a bump up would be Washington finally resolves the debt ceiling issue and before August 2nd and take away that element of uncertainty, because the earnings on stocks have come out really good, and I think we'll continue to see that for this earnings season. So if we can remove that debt issue, ceiling issue, I think the markets could see a little rally here. And we have 2 weeks left until August 2nd, and of course Congress continues to really wrestle with the idea on how to raise the debt ceiling and cut and make the cuts. So Moody's and Standard & Poor's both placed the U.S. on review for possible downgrade of its credit rating. Both cited the risk of at least a short-term lived default, as did a Chinese rating agency. Of course, the Chinese have been talking about this for some time. Meanwhile, Senate Minority Leader Mitch McConnell proposed a fail-safe legislation that would permit President Obama to raise the debt ceiling by up to $2.4 trillion in 3 stages. As I mentioned, the European situation, the third largest economy, sent yields in Italy's sovereign bonds soaring, increasing the cost of borrowing when the country already faces a budget deficit. And meanwhile, Moody's downgraded Ireland's debt to junk status. Finally, 8 European banks failed the stress test designed to show whether they have enough capital to withstand financial shocks. And back home, we look at the trade deficit, and it was hurt by high oil prices in June. It rose to its highest levels in October of 2008, according to the Bureau of Economic Analysis. And then prices at the consumer level fell in June for the first time in a year, though a decline in gas prices was chiefly responsible for that. Helped by worries about the European debt European debt and the U.S. political wrangling over the debt ceiling, gold bounced back from its $50 an ounce slump of late June to hit a new record every day last week, and it ended roughly at $15.90 an ounce. And as I speak today, John, on the July 18th around noon, gold is up around, it's bouncing around 14 to 16, $17 an ounce up again. So it's up over 1,600 an ounce, a new record. Federal Reserve Chairman Ben Bernanke seemed to leave the door open to the possibility of further quantitative easing. However, he also said the Fed's expecting some economic recovery to pick up, and that QE3 is only one of several options for easing financial conditions if necessary. So it'll be interesting to continue to watch as what the Federal Reserve is going to do as far as additional stimulation to the economy if we don't see a turnaround. And expecting a turnaround, we have key releases this week of housing starts and home resales. Housing has been continued weakness, and the values of homes have continued to go down. So that will be interesting to see how those reports, along with other economic reports over the next several weeks, to see if the Fed's going to have some kind of response. This week, absent something unexpected, the debt questions here and then abroad will likely trump most of other issues as earnings season continues. So as the market continues to, as the weather continues to heat up, and the political winds out of Washington continue to heat, you want to use any rally if we get a debt ceiling issue resolved. Use any rally to help tighten up your stops and be more defensive once again as the summer months continue to roll.
No, that was a great report, by the way, because I have several questions for you. There's a lot of news today, and you've covered most of them. I wanted to ask you about Italy. You've covered that already. I wanted to ask you about gold. You've covered that already. And the debt ceiling. That's also another hot topic. So the gold. I want to go back to the gold now at 1,600 an ounce trading today, intraday. So we still don't know how that will close out today. But where do you see? I mean, you invest in gold, right?
Yes, sir.
Okay, so where do you see gold at the end of the year? Will that depend on the debt ceiling being resolved? Will that depend on there's a lot of economic factors out there.
Yeah, I don't think the price of gold is not going to depend on whether they raise the debt ceiling or not necessarily. I think the longer term trends are driving gold. Naturally, with the gold dip we saw back in May and June, softness especially into June, it was a buying opportunity, and investors went back into gold. The uncertainty is causing more demand for gold. Governments aren't selling their gold. Governments are actually buying gold, and pension funds and endowments are starting to add gold to their position. So that's creating what I think is going to be a floor on the price of gold in that $1,500 range. We possibly could see gold move. Usually the fall time is a good time for gold in metals, and so it's particularly gold. So we could see gold actually close to 1,700, assuming really no major risk or uncertainty beyond what we have today. And so I think the gold uptrend continues. It could be volatile, especially if there is resolve on the debt ceiling and the markets rally and the dollar rallies. We could see a pullback in gold here and there, but long term, I'm very bullish on gold because of all the debt concerns we have. Not just the debt issue ceiling limit, John, but long term, our debt is just really, I won't say unbearable, but we've got major issues with our debt long term and the dollar, as well as Europe.
Yeah. Do you think we're going to be at a point where there's some talks now that some of the European countries will have more debt than they can actually pay? Will that going to be an issue if we continue to get some increase our debt and without doing any payments to it?
Well, naturally, if we don't make payments, whether it's to our own, uh, you know, to our own citizens who are on the payroll, whether it's Social Security, Medicare, whatever, but definitely interest payments. You bet it's going to have a big time effect on rating agencies are already at the door telling us that that's going to happen. And number two, you've got China and other major countries that will also penalize us as well if that were to happen. So I don't think we're that stupid as a nation. Hopefully we're not as leaders to do that. I think a lot of it's, at least in the short term, a lot of hot air, a lot of tactics of trying to just scare people and for their own political good and well-being as far as the politicians. But we do have issues, and even though we do raise the debt ceiling or temporarily fix this thing, we've got longer-term issues, and that's why I think gold is a good place to have some in your portfolio.
That's Greg Womack, president of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CDTV.net in New York.